Business and investment opportunities are often all about good timing. And with the recent rise in oil and gas prices and the restriction of fossil fuels from Russia, the UK is looking at securing more local supplies. Companies that are either producing or bringing on production projects would seem to be sitting in a pretty good position. We're talking now to one such company, Angus Energy. It's an AIM-listed onshore oil and gas development company focused on moving ahead with its portfolio of licensed UK assets. Saltfleetby in Lincolnshire is its flagship project, and it's just completed the acquisition of the part of the asset it didn't already own. And it's got first gas imminent as well. George Lucan is the chief executive. He joins us on the line. George, it's good to be able to catch up with you again. And as I said, it's all about timing. And you've just released another RNS actually updating investors on what's happening. Give us some more details about precisely where you are in the context of this first gas, which I believe is just about to flow through.
That's right. We're in the closing furlong of this commissioning project, and we're looking for a first gas date, as I've advised, of the 27th of June. It may come forward a day or two or go back a day or two, but that's the hard and fast target that all of our suppliers are working to. I just give a sort of runway to investors. We'll be actually dribbling out little milestones pretty much daily now on Twitter and RNS Reach of each phase of this commissioning project. But in the next few days, what you'll see is completion of pipe work and completion of hybrid testing of that pipe work. And that's what we call getting mechanical integrity. It means that the whole thing actually is solid as a rock, and you can start to flow gas through it. Now, we'll start with flowing nitrogen gas through the plant, section by section, and pressuring up to natural test pressures, and checking the functioning of all the valves along the way. When that nitrogen testing is complete, that's the moment at which we finish off our verification that we've got all our paperwork in order, and we start to introduce live gas. And that's called wet commissioning. And that can last anything. Well, in a really complicated plant, it might last months. But this is a very simple plant with very few moving parts. And we expect that to last about 7 to 10 days at most. So that's how we're getting toward the 27th. But as I say, we'll be able to give graphic evidence of every step here on Twitter and RNS Reach.
Well, certainly, I think investors will be keen to hear, as you say, more about it as it goes along. Just remind us what this Saltfleetby asset is likely to deliver in terms of daily output and, of course, the longevity of the project, of the asset.
The asset was actually originally looked at in 1984 by BP. They did an exploratory well, and then it was picked up by Candeca, and they've been drilling really since the end of the 90s. The pipeline was completed to the then Thistlethorpe refinery. So it was the largest onshore UK gas field. And it was bought by Gazprom really as a storage opportunity. They weren't interested in its production capability, and indeed they didn't advance the production along very much at all. So they left quite a lot on the table there. We think, our competent person thinks you've got about 36, I think, BCF left to play with. We're looking at 10 million scuffs a day. Sorry, that's 18 BCF. Looking at 10 million scuffs a day at maximum production. That works out at a very considerable amount of revenue. In fact, at forward, the current forward curve, we're talking well over £175 million worth of future revenues. That was on my last count. The price jumps around a bit like Bitcoin. We have a proportion of those revenues hedged, but it's a very significant asset, and it should run for anything from 9 to 15 years from now. And so it's been worth the wait.
And of course, I said at the top, this is absolutely perfect timing because you're playing into a market which is so poorly supplied at the moment, and prices are going up. I mean, what do you see as the market you're selling into? I want to get on to the offtake and who's taking it in just a minute, but how do you see the market developing given the current set of circumstances, which has constricted supply from other sources?
Yeah, well, we don't see those supply constrictions going away in a hurry, partly because it's very difficult to bring online new facilities. And that's not just new sources of gas. That's a 5-year job to bring on a big field, say in the North Sea. It's also distribution capabilities. So Germans talk about coming away from pipeline gas from Russia, but you don't just build an LNG plant overnight. That's again a 3 to 5, if not longer, year operation. So we see those supply constraints being around for quite a while, and we also see the switch over to cleaner technologies as being constrained in every country by grid capabilities. So, to upgrade your national grid, again, this is a 5 to 10 year task. So I don't see these constraints going away in a hurry. And therefore, I think we will continue to enjoy very high forward gas prices.
Let's look at where the gas is going. As you said, it takes a long while to bring anything on in the North Sea, anything where you're drilling down through water, of course. But in this case, you're onshore. So, I mean, that plays into the ease and accessibility factors really, really well as well. Who's going to be taking this gas? Where are you selling it? Who are the recipients?
We go straight into national grid. We're one of the few companies in the UK who has a dedicated terminal, which used to service the big Saltfleetby refinery and now just services us. Then the off-taker is Shell, and it goes and forms part of the national balancing point. So it goes into your and my boiler and cooker and our central heating. So it's as simple as that. It's just clean gas for domestic and industrial use.
Now, let's look as well at how investors are going to benefit from this. When we last spoke, I know this was you were still in the process of putting this all together and so forth. So actual first gas coming through at the back end of this month is really exciting for those that have stayed the course. Let me just quickly bring up a share price chart, because I think it's worth looking at this in the context of where the share price has come from. I can't remember exactly when we last spoke, but I know it was pre-COVID. We've been bumping along the bottom. You'll know the shape of this well. What are we pricing in at these levels? I think it's 13-14 million pound market cap. You're talking about 175 million worth of revenue. What's keeping a lid on the share price? You talk about the dilution we've had. I think it was in total of £6 million, I think you've taken on, haven't you, in total costs to acquire the rest of this Saltfleetby asset you didn't already own. What do you say about where the share price is and what the future returns are going to be?
Right, yeah, Jeremy, that's not well understood, partly because that £6 million is being raised in two parts. So each of the websites that you're referring to, they don't actually yet update the full share capital. So for a week or so, it's going to look quite confused. I think the market cap's actually about 20 million
right
today. And then following the next issue of shares, it will rise again. So it's a little bit complicated. Investors, I think, have had difficulty getting their head around this. But put simply, we've diluted by about 80% more shares, but we've effectively acquired what people regard as the bulk of the value of the company, and the other 50% we didn't own. So we've doubled, or nearly doubled, the value of the company. So net, your share price in such a circumstance should go up, not down. It's been complicated and difficult to absorb. So I don't think shareholders have yet, or investors have yet appreciated that. It's reasonably simple. Again, you increase your share capital by 80%, you increase your value by more than 80%, your share price goes up, in theory. And I'd say it's even better than that, because we got this at a massive discount, well, in our view, a very significant discount to its formal valuation back in October, when gas prices themselves were half what they are today. So an even bigger discount. Now, in that circumstance, you're saying, well, I've increased my shares outstanding by 80%, but what's the increase in the value of the company? Well, it's well north of 100%. So my view is we should have seen a rise in price, and it's only that it's been difficult to actually absorb all the different moving parts here that's holding that back. And I think, rightly, everyone wants to see the actual gas flow, so not least me.
Yeah. Look, the other thing I want to catch up with you about is what's happened over the last 6, 8, 10, 12 months or so. Of course, with COP21, Glasgow last year, everybody was talking about ways to wean ourselves off all these fossil fuels, but the times have changed dramatically as well. What pressures are being brought upon you as chief executive to ensure that you are as ESG friendly as possible, the social, the governmental, the environmental side of this business? What do you say to those that are critical still of fossil fuel producers?
No, I'm quite sympathetic to the green lobby. And we ourselves are devoting a renewed effort in terms of geothermal, subsurface analysis and seismic acquisition. It's not inexpensive. It's very long-term planning to shift from hydrocarbons to renewable resources. So I appreciate that. We've taken that on board. We like to think we're increasingly aligned. There's an element which has become very, very obvious, which is if you try and shift all your investment away from hydrocarbons, you end up with a shortage of them. That has a very significant immediate impact, which is people around the world, when they see these gas prices, they start turning coal back on. So this is the worst of all worlds, and it has been driven very much by the environmental lobby. So and I think the cowardice of some of the hydrocarbon companies in not holding their ground and saying we still need to deliver energy if we're not going to address the amount of consumption we're doing, and nobody seems to be prepared to address the amount of consumption yet. So I both have sympathy with the environmental lobby and some degree of frustration that they seem not to be able to recognise the constraints around the speed of transition.
Interesting subject. Look, I'd love to talk to you again in 2 or 3 weeks' time when you've got this flow of nitrogen through the system and you're getting gas through, because I think that obviously is then the point that you've got to prove to the market that you can do it and you're bringing this gas on. Just very quickly, how busy will you be in the next 2 weeks, or is it just a waiting game?
Well, actually, we're hoping that we've got a really excellent crew of specialists on site. We have a specialist third-party commissioning house. We have Humberbank Instruments on the instrumentation side. We've got Inspec on the control side. We've got the excellent pipework team, TEI from Wakefield, and we have an excellent electrical team from FES. So these are really top-notch suppliers. They're very much, it's handover now to the specialists and let them get on with the very important thing, which is to put this plant into operation safely, and that's my target. So to some extent, we're in an oversight and support role now here, and therefore we're beginning to look again at our other assets and our geothermal ambitions.
Yeah, look, okay, well, as I said, I would like to catch up with you again when everything's up and running. But George, in the meantime, thanks for your time. It's a pleasure to catch up with you, talking about the way forward for the company. That's George Lucan. He's the Chief Executive of Angus Energy. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.